Hey everyone, welcome back to Corporate Decoder, the place where we try to make sense of corporate jargon so you don't have to. Today we are decoding Bion Environmental Technologies, Inc. And trust me, their latest report had us scratching our heads and then, well, feeling a little more informed by the end. Let's just say they've been through a roller coaster. We'll be diving deep into their financial statements, looking at where they stand and more importantly, where they might be going. You know, the real juicy stuff that tells you what is happening behind the scenes. Before we get started, if you appreciate getting straight insights from these corporate mountain of documents, make sure you're subscribed. We also have a Discord community linked in the description below where you can find more of these deep dives and chat with us. Alright, let's get this decoded by an Environmental Technologies Incorporated. Incorporated way back in Itenjo. They've been trying to make livestock production more sustainable, profitable, and transparent. Their big idea revolves around something called Gintech, which is basically a fancy way of saying they have technology to clean up animal waste, produce renewable energy, and create valuable fertilizers. It sounds like a solid plan, but the path to making it happen has been anything but smooth. Now, let's talk numbers, because at the end of the day, that is what really matters. How much money are they making, losing, and what does it all mean? For the year ending the 30th of June 2025, Bion reported a net loss of over $2.3 million. Now, that might sound like a lot, but it is actually a significant improvement from the previous year ending the 30th of June 2024, when they posted a staggering loss of nearly $11.7 million. That is a huge drop in losses, over $9 million better. What caused that massive loss in 2024? Well, it looks like they took a massive non-cash charge of over $9.4 million. This was due to writing down the value of their initial project at Fair Oaks, Indiana. Apparently what they thought was the operational project turned out to be more of a research and development facility, and on top of that, it was on land they were only leasing long term. So they basically had to admit that part of their investment was worth zero. Ouch. Looking at their liabilities, things are a bit concerning. As of the 30th of June 2025, their total current liabilities were over $7.1 million. That is a pretty big jump of almost $1.4 million from the previous year. This increase is largely due to new debt and more deferred compensation, meaning they owe more money to employees and others. And how much cash do they have to deal with all of this? Well, as of the end of June 2025, Bion had just over $4,400 in cash. That is right, not $4.4 million, but $4,400. Their cash situation has gone from bad to worse, dropping from about $52,000 the year before. This is a massive red flag and points to extreme cash flow challenges. They are clearly struggling to get funding, and this lack of cash is impacting their operations. When we look at the loss per S-hair for the year ending the 30th of June 2025, it was about 4 cents per S-hair. This is down from 22 cents per S-hair in the previous year. While a smaller loss per S-hair is positive, it is important to remember they are still losing money for every share outstanding. Now, let's talk about their debt as of the 30th of June 2025. They owe over $1.7 million to affiliates. This means they owe money to people or companies that are connected to them, which can sometimes create complex situations and potential conflicts of interest. On top of that, they have other convertible notes payable totaling over $1.7 million, along with other notes and deferred compensation. Their debt load is substantial. Interestingly, their operating lease right of use asset, which represents their right to use leased property, is 0 for 2025. This could mean they've either given up a lease or the lease has expired, which might be related to their financial struggles or a strategic shift. One of the biggest risks they highlight is their extremely limited financial and management resources. They frankly admit they need more money and more people. This is a huge challenge, especially when you're trying to grow a business and develop complex technologies. They're also concerned about market development for their products, potential shifts in government policies that affect renewable energy and fertilizer credits, and the vital need to attract strategic partners. Without these partners, they might not have the expertise or resources to pull off their ambitious plans. Looking at their executive compensation, it is a bit all over the place, with many past executives retiring or passing away. For the year ending the 30th of June 2025, Craig Scott, the current CEO, received around $417,000 in total compensation, including stock awards and options. The report also details a significant amount of stock options and warrants held by executives and directors, which is common to incentivize performance, but also contributes to potential future dilution for existing shareholders. The company has a large number of securities outstanding that could be issued upon the exercise of options and warrants, specifically over 38 million. When you consider the total number of shares outstanding, this indicates a significant potential for dilution, meaning existing shareholders' ownership percentage could decrease if these options and warrants are exercised. Let's look at the auditor's report. Haney Twine Company, their auditor, has issued a strong warning directly in their opinion. They state that Bion's financial statements have been prepared assuming the company will continue as a going concern. This means the auditors have serious doubts about Bion's ability to stay in business. They highlighted that Bion has not generated any revenue yet and has suffered recurring losses. This is a classic red flag that investors should pay close attention to. One of the critical audit matters, which means it was particularly challenging for the auditors, involves equity transactions and convertible debt transactions. This is because the company has numerous complex agreements for stock options, warrants, and convertible debt. These require management to make difficult estimates about values and perform complicated calculations. The auditors spent a lot of time just making sure these numbers added up correctly. This complexity also hints at the messy financial situation the company has been in. Now, what is the story here? Bion has a potentially game-changing technology for a massive problem: waste from agriculture and industry. They've developed this ammonia recovery system, or ARS, and the GainTech platform. The idea is to turn waste into valuable products like fertilizer and renewable energy. That is the good news. The bad news is they've been heavily struggling to get funded, manage their operations, and even retain leadership. They faced constant financial stress, leadership changes, and lawsuits from creditors. Their plans have shifted from large integrated projects to smaller bolt-on solutions, which is likely a move to reduce capital needs and get to revenue faster. However, the risk of not being able to raise enough money to stay afloat is very real, as highlighted by their auditor and their razor thin cash balance. It feels like a classic case of having innovative technology, but facing immense operational and financial hurdles. My take on Bion is this is a high-risk, potentially high-reward situation. The technology itself sounds promising for addressing significant environmental concerns. However, the company's financial health is extremely precarious. They have a mountain of debt, very little cash, and recurring losses. The constant need for funding and the complexity of their financing arrangements, particularly with affiliates, add layers of risk. They're clearly in a race against time to secure funding and execute their strategy before their cash runs out completely. The departure of key leadership and the write-down of assets paint a picture of a company that has been in survival mode. The future really hinges on their ability to secure substantial outside investment and successfully navigate these financial and operational challenges. It's a long shot, but if they can pull it off, the environmental and market opportunities are significant. Alright, that is our breakdown of Bion Environmental Technologies Inc.'s latest filings. What is your take on these numbers and what they signal for the company's future? Drop your thoughts in the comments. If this analysis was valuable, hitting that like button really helps, and subscribe for more deep dives. Don't forget to check out the Discord in the description. Thanks for watching, see you next time.